welcome back to MGTS, and today I'll be sharing with you the basic things you need to know when it comes to trading. When you hear the word structure, what comes to mind? A lot of things come to mind. People talk about trend, which is the major thing when it comes to structure. The zone is certainly one key thing when it comes to structure, but today I want to be demystifying the basic things you need to look out for when we're actually talking about structure in the financial market. So let's just dive straight into it. Right, lest I forget, don't forget that this information is actually majorly for educational purpose. Attempting to put your money on this is actually based on your own risk alone, but trust me, all the information given out here are being tested and trusted before we give it out. But since we are actually not a financial advisor, we are just an educational platform. We're just saying I should let you know that if you actually practice this, backtest this on your system, I actually confirm it, you can actually use it. So let's go right into the chart. Right, so today I'm going to be talking about market structure and some key things you need to look out for when we're talking about the market structure, which first thing is the trend. Right? First thing is the trend. So when we're talking about the trend, what are we talking about? We're asking, is the market in an uptrend or is it in a downtrend? So how do you know an uptrend? How do you know a downtrend? It's actually very easy. So let's just dive straight into it. I'm going to use a tool here called the path tool, just to indicate the direction of the market. So we're looking for an uptrend. You want to see market move from a low to a high, give you a higher low, higher high, higher low, higher high, higher low, higher high, and so on and so forth, basically. So let me just label it for you to tell you understand. You have a low here, a low, right? Next, you have a high. Next, you want to look out for majorly is the higher low, basically. The higher low is very, very important. The higher low is where you actually look to enter your trade from. The higher low is the major area of focus in an uptrend when you want to trade. The higher low is your major area of focus when trading the financial markets. The higher low is extremely important because you don't want to enter a trade in a higher high because it's going to actually get you stuck. Alright, but with the higher low, you are certain about being profitable basically when you actually take a trade. Alright, so basically you have a higher high, you have a higher low again, right at the bottom here, and so on and so forth. So when you actually have a series of higher highs and higher lows, market is said to be in an uptrend. Now, reverse is the case for a downtrend. For a downtrend, you're going to have a high to a low, a lower high, lower low, lower high, lower low, lower high, lower low, and so on and so forth, basically. So let's just label this also. We have the high here. Alright, we have the high, the high, then we have the low. The next thing we want to have here is what? The lower high, basically. The lower high. Why is it called lower high? It's because it's low, but it's lower than the previous high. It's called lower high because it is lower than the previous high. So it's lower high. It's lower than the previous high, right? Next thing we have is something called the lower low, basically. The lower low is the next thing. The lower low. The lower low is the next thing we have up on the screen. Alright? The next thing is lower high, lower low, basically. So the market is giving you a series of lower highs and lower lows. The market is said to be in a downtrend. Now, once you've known this, obviously, like I said, in an uptrend, you look to actually enter a buy because you're actually anticipating an upward movement. You enter a buy from a higher low, right? To actually anticipate the higher high movement. While for a downtrend, you look to sell from the lower high, basically. Right, so take for instance, just a quick glance on what I'm talking about. So the market makes a move to the upside and gives you a retracement. You look to buy from here, right, and follow the price up to the next high. While for a sell, you want to enter from here. Sorry about that. For a sell, you want to enter from this point, basically from the lower high, so you can actually follow the move to the downside, basically. So stop loss place below the previous low, take profit. The take profit one will be the high, the initial high, take profit two will be the next higher high, that we created in the market, right? This is basically this for structure. Now, the next thing you want to take note of is something that not everybody actually talks about, right? Is premium and discounts. Premium and discounts. Premium and discounts. So what is premium? What is discount? What is premium and what is discount? So basically, whenever you have a price range in the market, right? Whenever you have a price movement in the market, so take for instance on this particular uptrend, right? You want to actually pick an indicator, a tool here called the Fibonacci retracement. An indicator called the Fibonacci retracement, right? And you pull it from the lowest point, right, to the highest point. From the lowest point to the highest point. So from the low to the high, right? Now, the premium is the areas above 50%, while the discount is the area below 50%. Right? Let me just use as the default setting for the SIP. I can actually see what I'm talking about. Apply default, right? So from the high to the low, right? The 0.5% and above is called premium, and 0.5% and below is called discount, right? 0.5 and above is called premium, while the 0.5 and below is called discount. So, so what should we look out for basically? The major reason I'm actually including these to this topic is because for you to actually know when to buy in an uptrend, price needs to come to a discount level, right? So when you pull your feet from the low to the high, allow price come back into the discount area. Your entry should come in the discount area, right? Why for a downtrend, reverse is the case basically. For a downtrend, reverse is the case, which means you pull from the high, use your Fibonacci retracement from the high to the low, right? And your area of selling, you guys be looking to sell from, should be on the premium area, right? So two major things we look out for today is understanding structure, which is what is the trend, is market in an uptrend or in a downtrend. Second thing you want to look out for is retracement, right? You don't enter the market when it is up. Wait for it to give you a retracement basically. When it gives you a retracement, that's actually when you actually enter from. Now, do you enter from every retracement? No. Right? The third thing you want to look out for is what I just said, premium and discounts, right? Premium is a particular level in the fib above 50%, while discount is every level below 50%. So actually wrap it up for today, right? It's a three-step thing now. First, what trend are we? Is it a downtrend or is it an uptrend? Right? That's the first thing. Second thing is, are we in a higher high area or a higher low area? So let's say, for instance, we are in an uptrend, you look for the higher low area, right? And do you take the trade from any higher low area? No. The major focus should be on the discount area, basically the discounted area, basically, right? Now for a downtrend, you pull your feet from the high to the low, right? And you take your trade from a lower high, which must also fall in the premium area, right? I hope this actually helps you to actually improve your trading system. Thank you very much once again for coming to MGTS to actually learn how to be profitable, because with MGTS, profitable trading is fun. Thank you very much. Bye for now.